What's up everyone? I hope you're having a great day today. In today's video, we're going to talk about the power of compound interest and how it can earn you a ton of money in the future. You can take a $100 investment and make over $1,000 on it. I'm here to make you money. Let's get started. To better understand compound interest, you really have to understand simple interest first. Simple interest is the return that you get on an investment, on an annual investment. For example, if you put $100 in an account and you get an 8% annual return, at the end of that year, you will have $108. Now I know what you're probably thinking, $8, that's not much at all. I can't do anything with that. But that's really where compound interest comes into play. Now the great thing about compound interest is you earn interest on your interest. So in 1 year, your $100 initial investment will be worth $108 with an 8% annual return. Now if you continue that 8% annual return each and every year, after 5 years, you will have $147. After 10 years, you will have $216. Now this is where it gets interesting, pun intended. After 20 years, you will have $466 on that initial $100 investment. And in 30 years, I know 30 years seems like a long time, but you're not doing anything to this investment. You will have $1,006 from your initial $100 investment. Now I know 30 years sounds like a really long time, but when you think about it, you're not doing anything to this investment. You're not adding anything to it. You're just putting $100 in an account and watching it grow exponentially for 30 years. Now I know what some of you are probably thinking, no thanks, I'll take my $100 and we'll go to the roulette table. Give me a couple spins and I'll get you $1,000. I will take an annual 8% return on an initial $100 investment any day over playing roulette. Let me just tell you, the casinos were not built off of winners. Now, if you really insist on going and gambling your initial $100 investment, you should really go play at the blackjack table because it's got a lot better odds than at the roulette table. All jokes aside, you really have to put yourself in a different mindset when thinking about all of this. If you want to go out and spend $5 on a iced mocha choca with extra pumpkin spice and some sprinkles on top, that's going to be worth $50 3 years from now. A new pair of shoes, if it's worth $100, can easily be worth $1,000 30 years from now. So you really have got to think about how much is this worth it to you. The sooner you can get into the long-term investment mindset, the more money you will make for yourself in the long run, and the better off you will be. Money invested now compared to 10 years from now will be worth a lot more in 30 years. You really have to think of your money investment as a money snowball. If you take a snowball and you roll it down a hill, it'll pack on snow on the way down. And by the time it reaches the bottom of the hill, it'll be a massive snowball, or at least a lot bigger than it first started as. The sooner you start your initial investment, the longer you can let your money ball roll down the hill. Each and every year, your money ball will collect more and more interest until you have a massive amount of wealth. This will allow you to have so much more money for things like your Ferrari, your big house, your big yacht, and if you really, really wanted, your iced mocha choca with a little extra pumpkin spice and a little extra sprinkles. Now that's just with one initial investment of $100. Imagine if you were to do this annually. So that means you have that initial $100 and then you do it the next year and the next year and the next year. You will end up with $13,240 by the end of 30 years. Imagine all the iced mocha chocas with a little pumpkin spice, a little bit of sprinkles you could buy with that. $2,648 to be exact. Now you're probably thinking to yourself, how do I get these 8% annual returns? Do they just appear out of thin air? Well, not exactly. You need to open up an account with a Fidelity, with a Charles Schwab, Robinhood's another one. Let me know in the comment section below if you would like me to make a video on a step-by-step tutorial on how to make an account similar to this and how you can make 8% annually per year. Now, of course, this 8% annual every year is not guaranteed. You're going to see better returns some year and some year you're going to see less. This is just based off of my experience in the market and what I have seen over the history of the market. One way you can make compound interest is at the bank. My favorite way to make compound interest at the bank is a high interest savings account. Now there's also checking accounts and certificate of deposits, but one is going to offer less of a return on your money, and one is going to keep you locked up and make your money less liquid than you would like. Now, keeping your money in a high interest savings account is not going to give you that 8% annual that we talked about. A lot of these are going to hover around 2 to 2.5% depending on which account works best for you. And to be honest, with inflation at 2 to 3%, that's barely keeping your money's buying power where it is today. That's why a high interest savings account may not be the best investment for your money initially. At just 2%, it'll take you 35 years for your money to double. That's just not a good investment for your money initially. Now, there are some scenarios where it does make sense to put your money into a high interest savings account. If you need your money to be liquid, which means if you need to be able to have access to your money without penalties, without short-term or long-term capital gains tax, you can access it from a high interest savings account with no problems. So if you're saving up for the down payment on a house or a rental property, this might be a perfect investment. Now, at 2%, you're barely keeping up with inflation. So this really shouldn't be used to save up for a house. You should already have the money for a down payment, and this will be simply to keep your money's buying power until you need to put the down payment on the house. One of the best places to invest your money is the stock market. The stock market returns an average of 8 to 10% before inflation per year. So after inflation, you can look at about 6 to 8%. Another great way to earn money in the stock market is through dividends. Dividends are money a company pays you for being a shareholder. Most companies give dividends, and you can choose to reinvest the dividends back into your compounding interest, or you can take them as cash. But of course, if you use compound interest, you're going to have better returns in the long run. So that gives us two ways to have compound interest in the stock market. One is through the appreciation of the company itself, and two is through the dividends it pays you for being a shareholder. So that's double the compound interest you can be given. Now, of course, in order to take advantage of this compound interest in the stock market, you need to reinvest dividends. That is very important, or else you will just take them as cash and they will not continue to compound over time. Now, one of the best investments in the stock market can be an S&P 500 ETF. One of my personal favorites is the Vanguard S&P 500 ETF, ticker symbol VOO. It has an expense ratio of just 0.03%. The Vanguard S&P 500 ETF also offers a dividend yield of 1.45%. So you're getting that dividend yield, and you're also getting the appreciation of the ETF itself. A third way to get compound interest is through real estate. There are usually two ways people invest in real estate. One is flipping houses for profit, and two is buy and hold real estate for rental properties. Let's use buy and hold real estate as an example. If you're looking at an annual return of 15% on a rental property, that'll take you just 5 years to double your investment. Now, I can just see the comment section blowing up about, oh, if I can find a 15% return on my real estate investment, that would be great. Those are so hard to come by. Well, yeah, I understand that it is a little difficult to come by, and the learning curve is a little higher to get into real estate. But put yourself around the right people, and in no time, you will have the right tools and the right knowledge to get invested in real estate. This is how people generate a serious amount of wealth. They invest through compound interest in the real estate, through their business. You can invest in the stock market, and you can also use the high interest savings account, which we've talked about is not the best way to do it. But the point is, just use compound interest and you will build massive amounts of wealth. Well, guys, that's going to do it for me today. Let me know in the comment section below what's your favorite way of earning compound interest. And if you liked the video today or found it helpful, make sure you give it a thumbs up and press the subscribe button, because it helps us grow our channel and help new people every day. Also, if there's a topic you'd like to hear me talk about, let me know in the comment section below. But until then, thanks for watching, guys. See you next time.